Hi guys, Harry Otis here, professional trader for 20 years. Started my career in 2005 and still alive in 2026. So today, yes, my man, Kevin Warsh, sworn in today as the new Fed chair, okay? While the market is pushing to highs, okay? Today we are Friday, the 22nd of May, the penultimate week of May. One more week to go, I guess. So we closed at highs. Market is basically saying that we don't care. We're going to keep going to highs. Just drifting higher, slowly drifting higher again. It's always the story for the past month. Everybody's clamoring to get into this market, okay? We'll get to Kevin Warsh. It has something to do with exactly why this market is so strong and my thoughts going forward regarding the new Fed chair and why everybody's so scared. Especially CNBC and all those talking heads are very scared of Kevin Warsh, okay? Okay, let's see what happens. And also, if we have time, we'll go over some of the trade ideas that we mentioned before and what I'm looking at. Okay, so first of all, technical picture, bullish. We don't have to go more crazier than that. Okay, however, there is a technical thing that you should be aware of. The RSI, as the market went down a couple, in the beginning of the week, went down, 2-3%. We went down in the RSI, and look, we're heading to new highs. If we get to new highs, slowly drift higher, we could have negative divergence on the charts. We also have already a crossover on the MACD, so you're getting a sell signal on the MACD. Okay, so technically, okay, even though we're at highs, technically you might be getting a sell signal going forward, especially if we go higher and fails and then go lower. Okay, however, I don't think it's a longer term thing. I think it's just a short term positioning. Okay, but just from the technical picture and what we saw from the RSI and the MACD there are some warning signs going forward, hence why we are still long, net long, but have some short exposure. Nothing has changed, okay? Your net overall portfolio exposure doesn't change day to day, okay, unless something dramatic happens, okay? So technically speaking, we are bullish. Sentimentally speaking, sentimentally speaking, I guess. Greed, 58, just went up a little bit, okay? Plenty of room to go higher. This is still extreme greed. The momentum is extreme greed because nothing has changed. But you see, market breadth, we were at extreme fear. We're starting to come back. We could have seen that this was a contrarian indicator and looking to go up. Okay, but yet the extreme greed in the put call options is what worries me. So we have some mixed signals here. We have some bearish, some bullish signs, and yet plenty of room to go higher. So that's great because when you have mixed signals, you don't know if you're at extremes yet. Okay, you're not definitely we're not at extreme greed, and definitely we're not at extreme fear. So when things are mixed and people aren't sure, that's good for the bullish case. You go along with the trend. Okay, that's what you do. So perfect for us. Okay, so yes, sentiment is good, supportive. Technicals are supportive, although might be some cracking. We might get a little bit up before going down. I don't know. We'll see. But we stick with a bullish trend. Okay, so let's get to Kevin Warsh. Okay, the big news in the market today. Kevin Warsh's real Fed regime change may happen deep inside Wall Street's plumbing. Okay, they're basically saying here that he's a hawk. Okay, if you see all of his interviews, he says that he wants to get rid of the balance sheet, the Fed balance sheet. He wants not get rid of it, he wants to reduce it. Okay, he wants to reduce it so that there will be plenty of room to, destroy inflation and thereby be able to lower rates when inflation goes down. Okay, so what happens when you have this kind of talk? Okay. Because of that, you have the Fed Watch tool here. Remember, we always look at the Fed Watch now. It's very important because we're right at the cusp, we're at the red zone, so we should be looking at it. For December 26, now we have a 42% chance for a rate hike in all of 2026. Okay, before it was not like that. It was always equal or lower. In one day, Fed's Warsh's nomination, boom, now we're at rate hikes. Okay, so that's what's scaring the market. Now we have a higher chance of rate hikes and 32% chance of standing pat. Okay, but remember, this is all war related. If the war ends, if there's they're meeting over the weekend. Let's see what happens. If the war ends soon, those inflation fears might abate. Okay, but let's see what happened to interest rates. We always look at the US 10-year as the benchmark in the market, and yes, it fell down today. It went down, the yield. So the fear in the Fed Watch tool and in CNBC sentiment is not being reflected today in yields. However, it has been over the course of the couple of months, okay, especially recently. Okay, so let's go over some math and why this is scary going forward. Okay, First of all, the reason for that, the reason we can't afford these high yields, or so people say, is that we have what do we have here? We have let's give some space here. So we're going to do some math, a little bit of quick math here. We're looking at the debt. Okay, we have 40 or 39, but let's round it up to 40 trillion in debt, okay? And we have a 2 trillion deficit, which corresponds to 125% debt to GDP. Okay, that's very high. And people say this is way too high. We can't afford it. We're going to die. Okay, so if, we have also another, harbinger of doom is that our $2 trillion deficit is going to probably be even higher next year because Trump wants to increase the military spending from 1 trillion. It's currently 1 trillion to 1.5 trillion. So you add another 0.5 here, okay? And also in the next 12 months, 10 trillion of this debt will need to be rolled over, okay? A lot more debt matures, but a lot of that is interagency debt, which will cancel out. But 10 trillion will have to be rolled over and sold to the public, okay? That's 25%. So if you have $10 trillion that needs to be rolled over, okay, at what? 5%, let's say, or let's say a round number of 5% or 4.5, whatever. Okay, if you take, 10 trillion of that, which is 25%, you have 10 trillion. Oops. Okay, we have 10 trillion times now rolled over at 5%. Let's say 4.5%. Okay, 4.5%. What is that? That equals to $450 billion. Okay, we just said, guys, that 2 trillion is the deficit. We're putting it to 2.5. Now another 0.5. $3 trillion deficit just from rolling over the debt. Okay, and next year another 10 trillion. Okay, so they're saying they're running these numbers and go, we can't afford a 3 trillion, and that's just if everything is okay. Okay, we still have liabilities like Medicare, Medicaid. This is all, and you can't do anything about that. So this will happen. Okay, you can't cut any of this. Okay, so Warsh is coming in and saying, no, I don't want that. I'm going to increase rates so we can get rid of the inflation. Okay, but you can't increase rates in this environment, or so they say. Okay, that is the thing. That's why everybody's scared. Yet what is the market doing? The market is basically nothing at highs. So why isn't the market? The market knows all this. It's not. It's very scary. This next year can go to 135% of debt to GDP. Okay, 500 billion. Let's erase that. We know it's 450 billion. Okay, so you have 440 trillion debt. Everybody puts these numbers out, and it's very, very scary. However, the market's at highs. Why isn't it going down? Also, look, I'll give you the counter argument. This is the fear, okay? The counter argument is that he can't do that. Let's say he can. Let's say he keeps rates at 4.5%. Listen, we've had rates at 4.5% for what? 2 years. And the market goes to highs, okay? Rates, historically speaking, at 4 or 5% are normal. Okay, but maybe they say we can't afford it now because now we have 125% debt to GDP. Before we didn't. Yeah, but look, we're pushing higher. Japan had 250% debt to GDP. We can push to 125, 135. Yes, we're in the red zone, but maybe it's 2 years away. Maybe it's 3 years away. We're not going to get it right away. People have to assume a lot of things for the market to crash because of this interest rate thing. So yes, interest rates might bite. We might get into the red zone here, but will it really tank the market? The market is saying no. If you look at SPY, it's saying no. Okay, we are at, let's get rid of these figures because we already know it and it destroys our picture here. So we know these figures. Why isn't the market tanking? It's trying to. Everybody's, in fear mode. Everybody is seeing all this, and we're getting a lot of bears. Remember, we said we still have a lot of bears. Even though we're at greed here, we have a lot of fear. in the AAI investor sentiment, a lot of bears came on. Okay, so we have fear at highs. We have fearful sentiment at highs, and the market doesn't care. Okay, this is why I'm telling you, don't look just at the narrative. Look at what's happening in real life. Okay, we can take this. We can take higher rates for longer, but just not forever. We're in the red zone. Something has to be done. Trump wants lower prices, but the market is saying the bonds are screaming hell. Okay, but the market is screaming that this war is over, and whatever. All those figures will go down. Okay, once Warsh comes in and inflation goes down and the war is over, he won't have to be this crazy. You'll see all this Fed watch stuff go down. Okay, but that doesn't mean later on it won't go up, because what I mentioned, that fundamental path of destruction that the U.S. government is headed at will happen. Okay, it just might not be right now. It might be next year or the year after. Just right now, the market sees 6 months ahead. So it's saying no danger yet, even with Mr. Warsh in the Fed, at the helm, at the Fed. So yeah, that's why we're pushing to new highs. We're climbing a wall of fear. That's why I'm more net long. I'm net long. And the fundamentals in the economy hasn't changed. Okay, higher interest rates was good when we have a strong economy. You just don't know. Don't fall for the narrative. The market knows everything. Okay, that's all I wanted to say regarding that. Okay, so let's go to one of the sectors that I still like, and I haven't forgotten about it, is Bitcoin, but not necessarily. Wait, oh no, not the Bitcoin futures. Bitcoin itself. Okay, going down. Okay, so I'm expecting it to go to 90, eventually go higher after this war is over. But it's not Bitcoin. It's what the ex-Bitcoin miners that I like MARA. Look at MARA. Bitcoin going down while MARA's up. We mentioned before that the MARA of old, okay, the MARA of here, okay, the MARA pre-February 2026, this entire MARA does not exist anymore. Okay, this is a Bitcoin miner. It's a shitty business. You don't want to be in it. So whatever Bitcoin does, I don't think MARA will get affected. You have Bitcoin going down recently and MARA going up, because recently, this is the real MARA. Will the real MARA please stand up? It's right here. Because now it's being repurposed for AI infrastructure. Okay, it has made deals before. It's for AI infrastructure to lend out its compute capacity for AI purposes. So this is why it's going higher. This is why I like it. This is why I think it's. Remember, here is when we bought the 10-15 call spread, and it's already 380. It's already 38. What is it? 60, 75% in the money. Okay, this is great. This is what we wanted. Okay, I also like Clean Spark. Just another one that is being repurposed. Look at that. I think it's going to go up to the 23 level, up to the highs. I think these are riding the trend, and I think MARA is my preferred vehicle. So I like how this is trending higher. I like how it's working. I like how it's divesting itself. It's separating itself from the Bitcoin move. Perfect. Yeah, you don't have to like Bitcoin, because for me, Bitcoin, I am not bullish Bitcoin. This is a bad trend. Okay, it's negative. It's down. Hoping it would go up, but once MARA changed to that AI infrastructure, a move or a meme, I'm very, very happy. Okay, that's why I think it goes higher. I think it bucks the trend. Okay, so this is the sector that I like, and of course, SPY, Warsh. Don't be fearful. Okay, the market is telling you the fear should not be in your head yet because of the Fed chairman. I guarantee you, he comes on board, he's going to do exactly what Powell does. Okay, there's going to be no real change. He's not going to shrink the balance sheet. He's not going to bring destroy this entire economy down in 3 seconds. Okay, we'll see what happens. But for me, I don't like piling onto the fear narrative. Okay, we still have fear narratives coming on with the market at all-time highs. Right, so that's it. That's what I wanted to say on this Friday. Enjoy your weekend, guys. Don't be afraid of Mr. Warsh. Even though I do expect we do have some short exposure if the market does go down, but I think any down move would be buyable. Okay, it's a buyable down move in my opinion. Right? Okay, guys. Later.